everyone. It is Evan here from the Trade Risk on Tuesday, November 6th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So today is election day here in the US. It is the midterm elections. At the time of recording this, voting is underway, so we don't have any results in just yet. Probably about 6 hours or so from right now, we'll start to get some of those. We'll start to tally up and get some of those results in. Either way, you know, tonight or looking at today's action here, the elections, that is, we do have a bit of a binary event, a catalyst on our hands here, very similar to an individual company reporting earnings. We know that the market is going to likely react and start to price in some of this new information depending on how the elections turn out, and therefore we do have a higher than usual chance of some outsized movements happening into tomorrow's session, either to the upside, to the downside, or it could be very well open exactly where we closed today. It could just be kind of a big nothing and a flat sideways open for tomorrow. No one knows. All we can do is sort of look at some of the levels here and start to understand some of the recent structure and the behavior that has taken place in the market. Look at some levels, plan accordingly, and take what the market gives us. But at any rate, if you do have exposure into tonight, hopefully it is within reason. You've done your due diligence on any outstanding risks, and you're not swinging. Hopefully, you're not swinging for the fences in either direction. Unless that's your strategy, then kudos and good luck to you. So let's jump in here to the S&P 500. This is a weekly time frame cash market. I don't want to go through the whole sort of spiel here again. I just did a the weekend market recap video, went in length on some of the major indices here, and quite frankly not a lot has changed. It is only Tuesday so far, but really structure of this market has not changed. We have an inside week forming right now. Certainly it is early. We know we have the catalyst on deck, so that's very likely to morph and maybe not actually hold true till Friday, but as it stands now, we have an inside week. We're trading within last week's range, and we're up 0.89% here by the close on Tuesday. Now, when we look here at the weekly time frame, the 30,000 foot view or the 10-second pitch here of what we talked about in last week's video is sideways range 28.72 to 25.33. Those are the long-term goalposts that we should be paying attention to. The year-to-date lows are 25.33. The highs here 28.72. Those were the highs from January. That's sort of the range that I'm looking at this market in from the longer-term perspective. We are right in the middle of that range, and therefore I don't expect a whole lot. I don't have much hopes for the market to be moving outside of this range anytime soon. I essentially think that we are going to be in this area for the foreseeable future. These are important levels to hold. If we start to get some weekly closes below this low here, or weekly closes above this high here, then certainly my analysis and posture on this market would change. But as it stands right now, I would expect chop in the context of this very large range here, which because it's so large, we can easily find some trading opportunities as shorter term traders. So as it stands now, that's the way I'm looking at it. We are below this trend line, which extends from the 2016 lows. If we can start to recover last week's highs, the past 2 weeks highs, start to get above this trend line here, start to work our way back up to 2800, I will progressively become more constructive on the market as more structure and support is layered in around these prices. Otherwise, I still think we need to respect the fact that we did break down here recently from this trend line, a couple of large expansion bars to the downside, high volume. We should respect that, understand that markets are a bit volatile right now. It's not the, in my opinion anyway, it's not the ideal time to be getting too aggressive frankly, on either side of the fence, but certainly on the dip buying candidates. So that is the weekly structure there. If we go down to the daily time frame, you can see the market extremely slow today. Frankly, if we go to the SPY chart here, you can see just how low the volume was here today. It was just like a summer trade, probably even lower than some of the summer trading that we saw back in July and such of this year. But markets really seem to be on hold, waiting for these elections elections, trying to just square up and see how everything shakes out before we start to get more capital committed here. So I would expect, at the very least, volume to pick up and accelerate pretty dramatically from today's levels into tomorrow's trading. But as it stands now, the market does not seem too concerned in the immediate term. Certainly we have already corrected here, and one could argue that some of this was already pricing in the uncertainty that is the elections in this recent drop over the past couple of weeks. And now we are starting to rebound here to the upside. Again, the relevant levels, kind of the things we talked about in last Friday's video, was that we were, even on this time frame, sort of stuck in the middle of a range, if you want to call it, from last week's lows at 259 and change all the way up to this high here of 281. The market's kind of trading in the middle of those goalposts here, and I really wouldn't be surprised to see a test on either avenue here, retesting the 280 highs or retesting the 260 lows. Either way, you know, and I think the elections could be a good catalyst to get either side accomplished here into tomorrow. I wouldn't be surprised to see us trading at either of those levels even later this week, you know, and from there we would start to get a little more information as to know whether or not these highs, these pivots, will actually in fact hold on either case. Now we do have this open gap here still from just a few days ago. It was actually last week on Wednesday we had this gap higher. Thought we were going to fill it on Friday's trading, but we did see bulls step in there. So we do have this open gap here. I think across all the major averages, around 268 or so is when it fills. Wouldn't be surprised to see that filled. All in all, expect chop, expect volatility here in this range as the market continues to make its way through some of this new information, make its way through earnings season, and just make its way through seeing some of the leaders that have helped carry this market to the upside to find some footing for them, talking the FANG stocks and some of the semiconductors, some of the financials. We're looking to see if support can start to come into some of those prior leaders. Financials maybe not so much in the leader category, but some of the other names that we mentioned there, and you know, those are sort of the clues and things we're going to be looking for. So for the S&P 500, 280 to 260, that's really all I have here to say. Expect volatility. I have no strong opinions on this market whatsoever. For me, it's more of a time to kind of just sit, observe, stay light, tactical with positions, pick the spots, and not swing for the fences in either direction. So that's the S&P 500. IWM here, very similar comments. Volume dried up here over the past couple of days. We look at the weekly chart. We are challenging the last 2-week highs here, and we're trying to close above them as of the close here on Tuesday. So that is a slight constructive sign. We talked about that in Friday's video. This led us to the downside, the Russell 2000. Now maybe it's going to lead us to the upside here on some relative outperformance if we can start closing above some of this prior structure, some of the past 2 weeks. Ultimately, this 159, 160 area, that's the elephant in the room here for the Russell 2000. So long as we are below that area, I want to be cautious here. I would expect volatility, chop, and sellers to really have the upper hand here, even though we are working ourselves higher now. I wouldn't be surprised again to even see a few more points rally into this 158, 160 zone, but that's where I'd really want to pay attention closely to see how the market reacts once we get back up there. For now, cautiously, you know, observing this uptrend here, but personally, I would not be chasing it. That's just my opinion, my strategy. For the Nasdaq 100, when we look here on the weekly time frame, switch over to this, you know, it is actually still kind of, you know, from a structure perspective, it's trying to hold on to these July lows here, and it is just right back to this 170 and change area. It's an inside week. We're still below last week's highs, and we're still below the trend line that it broke down from that extends from the 2016 lows. This is a busy chart. There's lots of lines here, but the same thing for the Qs here. If we could start to clear above, say, 173, ideally 174, that could change things pretty quick here to get the Qs back on track for leading us to the upside. It's certainly not there yet, but when I look across all of the major averages right now, even though the IWM is starting to clear last week's highs, the last 2 weeks' highs, it has fallen quite a bit. Structurally, it is more damaged here than the Nasdaq 100, which is still trying to hold on to this July pivot, which is trying to wrestle with this trendline slope from 2016. So if the Qs can start to get us above 173 and then ideally that 174, 175 area, that would be a good constructive sign for the market. That's what I'd be paying attention to. So in the short term, looks like maybe we could carve out a little clearance here back up into this 175 area. That's what I'd want to be paying attention to. Otherwise, we still need to be cautious, I think, on all fronts across the market. We can't let our guard down. We're seeing some bounces here. We're seeing some short-term trends play up. We're seeing volatility start to compress a little bit, but let's not forget that there was a good amount of technical damage over the course of October, and we don't want to jump in too quick here as we still have some cracks underneath the surface, if you will, in some of these markets. So that is sort of the take and levels to pay attention to on the major markets there. Again, we could see some good moves into tomorrow's session, so let's pay attention to some of those levels. Let's watch those more extreme pivot areas that we talked about to see if they do hold or give way. Next up here is the TLT. TLT is slightly higher on the week here, but not saying a whole lot. Last week was a real rough week for TLT as it broke down to new year-to-date lows. We have essentially 2 inside days printing totally inside of Friday's range so far. We're trading just at the 52-week lows. Things don't look good here for treasury bonds. If we can start to resolve higher, if we can, and now if you're active here, so structurally this is where time frame is so important, and this is where I think a lot of confusion can set in. I do not like TLT from a structural perspective here. We're in a downtrend. We've been in a downtrend now, you know, for most of this year. Most of this year we went sideways. We recently broke down here in early October. We're now trading at the lows. The one thing I will point out here, depending on how active you are, if you are a short-term trader that can take advantage of some of the more nimble swings here, is we do have some positive momentum divergence in the MACD up here. So in other words, as price broke to new lows just over the past couple of days, we're seeing the MACD still holding up, not taking out the lows made back in October. And we do have a couple of inside days right here printing. So if we suddenly saw a push higher and back above, say, this pivot low here from Monday the 8th, then I would not be surprised to see a short-term squeeze to at least back up to these highs here around 115. This is a trading setup that we trade often, but this is almost you know, exactly what we look for when we have some divergences like that. We have a nice price compression there, and if we can reclaim this pivot, I think if you're short and you're active, you could play this trade to the long side here. But again, from a more macro, longer term time frame, I don't like this larger term trend. So for me, this is where picking your spots is important, and this is what I sort of talk about when I say that. You know, getting long TLT, if we get a move above, say, 113 for a quick trade for a few dollars back into 115, I think that can make sense, but I certainly wouldn't want to be a hero going down with the ship trying to knife catch this if this continues to break down or if it starts to clear through these recent lows. So some opportunity there. Really depends on time frame, like most things do, but there is some short-term opportunity there if we do get a resolve higher in those inside days. Something to think about. Next up, if we go to gold, gold here, really not doing a whole lot so far, down about 0.5%. It's been comfortably sort of moving sideways here. It had this nice move above 115. We've been saying we want to see it hold above 115. So far it is, so that is good to see. More stabilization, but it's certainly not running away with it to the upside here. It's really taking its time and consolidating, so we're going to continue to keep an eye on 115 and see if it can hold above there. Silver, very similar situation, nothing new to say about it. It's essentially gold, but looks a little more lackluster. It is certainly tight, so I will give it that. There's a lot of price compression and sideways trading here, and when we have volatility contraction, that leads to expansion, so there will be opportunity, but for now, silver is still comfortably consolidating. Finally, if we go to oil, this continues to really get hammered here. It's finally back into an interesting spot here, which was the June structure where it found some support. This band in here, I know my chart's going to be a little busy, but this $13 to $13.25 area, that was you know, the highs back here in January, the highs back here in March, right through some of this consolidation. 13 was the lows throughout June. So there are some price structure here, some price memory where price has inflected before. It is oversold. It is down about 20, almost 20% exactly from the October highs here in pretty much a straight line into some more meaningful support. So I wouldn't be surprised to see some reaction, some hold here around $13. Again, it really depends on how active you are, very similar to the TLT example we just looked through. And note that USO did break down from this trend line that started back in late 2017. It is still below it all the way. It needs to reclaim about 14.25 to get back above there. Finally, natural gas here seeing a nice pop here to the upside to start off the week, something that we enjoyed seeing because we were long this this ETF here last week. We talked about the entry in Friday's video, getting involved over the course of this week, and we did sell 50% of our position at $29 here yesterday. We still have half of our position still on. We'll trail our stop and we'll continue to let this work. But UNG really started with this nice strong uptrend and the volume increase, which we were really talking a lot about in September and October as bulls got us back above to new year-to-date highs, cleared through some past resistance. It put in a nice consolidation here, working off mostly through time the nice run-up that it saw in September, and now it looks like it's very much starting its second leg higher here. This proved to be a nice continuation pattern, and we're going to look for more progress by the bulls. It did just have a huge move, so I wouldn't be surprised to see it slow down, compress, maybe fill a little bit in here, but we're going to try and stick with it in terms of our position, and so far we continue to be long. So that is the market recap for Tuesday, election day here in the US. Get out there and vote. And also, let's pay attention to these levels into tomorrow's trading that we talked about. And I think that's it. So good luck. Thanks for watching. As always, do subscribe to our YouTube channel if you like these videos every Tuesday and Friday, Wednesdays with some trade ideas. So thanks so much for watching, and talk to you next time.